Someone is out there on the brink of zero. That's okay. In fact, I'd argue that's a good thing when we get it. Now, do we get it this week? Do we get it next week? Someone's going to zero. I don't know who, but it'll be great for everybody else that survives because everybody will learn from that.
FTX, Luna, Three Arrows Capital, BlockFi, Voyager. Really, all in all, 2022 was a brutal year for crypto traders. But in the long run, and once the dust settles, these washout events are actually good for the markets. But how can that be the case? How can people losing faith in the sector, losing faith in crypto, how can that be good for the industry? How can people losing billions of dollars be a good thing? In this video, I'll be explaining my pitch and talking about why this great market cleanse is actually a good thing for the crypto market. And you need to know and understand this, because clarity on this issue is the only way that you can truly time big gains in a bear market. Welcome to the channel. My name is Maddie, and this is Altcoin Buzz. Bear market, bull market, whatever it may be, whatever you're investing in, I wish you all the very best of luck. But I am not a financial or investment advisor. This is not official financial or investment advice.
And that's what I like about a washout, an event. And I think we're due for one in crypto land. And I don't know who it's going to be, but I guarantee you 100%, I've seen this movie before, you will learn later that somebody put on a heavily levered position, they got wiped out. And it's good. It's a good thing.
Let's go back here to a discussion of first principles. And I probably think that your first question about this would be, what can possibly be good about a true market cleanse, a true washout for the crypto sector? We've seen many projects go bankrupt, unfortunately, and people have been losing billions of dollars. How is this a good thing? Well, look, the answer is that it's not good, especially for those people that lost a lot of money, in some cases their life savings. I'm not celebrating that. That's not a good thing. But crypto originally, especially in the form of Bitcoin, was founded upon some key principles. And let's be honest, a lot of people in this industry, active traders, successful traders, many of them never even learned these basic principles. A lot of people are also aware of these principles, but unfortunately choose to ignore them. And so it's important to be reminded of what those first key principles are. We're talking about self-sovereignty, privacy, decentralization, the separation of money and the state, censorship resistance, financial inclusion for everyone, and also self-custody. These 7 principles are the most important elements really across the entire industry. They started with Bitcoin, but they apply to altcoins and the entirety of the crypto space. Let's take a look now in greater detail. FTX is a great example here. It was a fraud, full stop. We know this now, and it looks like it was a fraud from the very beginning, with its commingling funds between it and Alameda and selling, quote unquote, its customers Bitcoin, which of course it did not have. And when we look back at this list of 7 principles, does FTX satisfy any of those first key principles? Well, the answer is no. Had they done what ethical exchanges do, which is, say, use us to buy your crypto and then move it to a self-custodied wallet, that would be in line with first principles, but FTX didn't do that. And they were centralized. They were not private, because customer lists are becoming public now. They were not a money issuer or attempted to be one with their FTT coin. They only used their scam coin to finance future investments and control in other projects. And they also were not censorship resistant, because as a centralized exchange, they were able to negate transactions or halt withdrawals, which we've seen many times now. And of course, they custodied everything themselves instead of encouraging you to self-custody. So based on the first principles of the industry, is losing FTX really a big deal in the end? Ultimately, no. It's always a good thing to see the fraudsters and the scammers and the charlatans. It's always nice to see them get flushed out. Now, don't get me wrong. We still sympathize with investors who were defrauded by this, and it's terrible that it happened. But is it bad objectively for the industry? Is it going to kill crypto? Obviously not.
I mean, when you see volatility of 50% on an 11-month basis, which we're seeing in Bitcoin, 60%, 20% days on Ethereum, you can't afford to put leverage on that.
Let's talk a little bit about market volatility, because you may have recently noticed, especially in December, that volatility in Bitcoin and Ethereum was way, way down. It actually seemed like Bitcoin was trapped between that $16,600 and $16,800 mark for over a month. that range only represented 1% of Bitcoin's price. Keep in mind that this is the same asset that normally moves 15 to 20% daily on occasion. Now, again, only moving 1% for that entire month of December 2022. And of course, we saw the huge comeback for Bitcoin in January, which begs the question, is the bull powering up again, or is this just a bear market rally or even a bull trap? We don't know yet. The numbers on volatility also demonstrate this. This is a chart from BitMEX, the biggest centralized futures platform after Binance. They're showing that Bitcoin's annual volatility here daily over the last 3 months. And since November, after a slight drop in late October and recapturing the same 25+% volatility throughout November, volatility has dropped like a stone. And the truth is that many of us think of volatility as a positive thing because traditionally this is what's made crypto profitable. Volatility is always nice on the way up, maybe not as nice on the way down, but as Michael Saylor would say, volatility is vitality. Peak volatility for Bitcoin in Q4 was as high as 26.26%. And now, after a long and pretty steady drop to 9.37% in early January, it's only just climbed back into the teens, and it's getting closer now to normal levels. And Bitcoin got a nice bump from 16.5 to about 17,500, that range, to the 22,000 to 24,000 range, which is where we currently sit. That is almost a 40% gain on still relatively low volatility. And the 6-month chart here is even more striking. 7 major exchanges have seen a drop from 48% to 10% volatility. And this matches the BitMEX numbers. It corroborates all that data. Volatility bottomed up in January and is still relatively low. But is that to say that low volatility is a good thing? Well, look, for the current market, low volatility is good because many speculators are out of the market. And volatility is lower because derivatives like futures and options are trading lower themselves. Many billions more in BTC and ETH futures trade than spot trades in BTC and ETH. And so more futures meant more volatility. Now, there are just fewer gamblers like those that used to use FTX and fewer legitimate speculators that are currently in the market. And this means that projects that are building can build and not be as worried about price fluctuations. Projects can also focus on their communities and not have to answer questions from a Three Arrows Capital, for example, about why their price isn't moving when some other project may have a higher price. This is good news. It represents less gambling, there's less nonsense in this space, and more quality projects are able to build sovereign financial and income-generating tools for more people. And by the way, this recent rally doesn't change that either. Overall sentiment is still kind of sideways to partially negative, and that means that it's a good time to build. Remember, quality projects use bear markets to build out their vision. Let me know, by the way, if you agree and what your picks for those quality projects are.
But people will learn their lessons. This is a good thing. This generation of crypto investors has not gone through corrections like this and not gone through them with leverage. Now they're going to learn an important lesson.
Now we have to discuss trading volume because while Binance gained market share against other centralized exchanges from 48% to 66%, the total CEX volume actually dropped pretty significantly. It dropped 46% in 2022 compared to 2021. And part of this is 2021 up until November was a bull market and people were trading a lot. So that's part of the math here. Take that into consideration. Another variable is the fact that the general public saw that centralized projects all seem to have that potential of blowing up and failing. Just think of Voyager, BlockFi. Another factor is the fact that all of the FTX volume went away. Some of it got redistributed, but a lot of it unfortunately just dematerialized. And that was a pretty big exchange. Yet another reason is that people remembered that decentralization and self-custody are first principles. They went to look for DeFi options like Uniswap and PancakeSwap instead. Uniswap now has higher trade volume than Kraken, if you didn't know. Like I said, volume is way down. This is both a positive and a negative. That's despite recent increases from this rally. The negatives are pretty obvious. Less trading activity means fewer big moves for short-term profits. Fewer futures traders means fewer spot traders as well, as many trade in both markets together in what's known as the carry trade. Also, it can make markets less liquid. But As this rally is showing us, buyers are still here and some volume has come back, just not to previous all-time highs. Is less volume a good thing? Well, less trading volume is good for crypto mostly because many are asking questions about whether or not the industry itself can survive. I understand why this is, but honestly, it's kind of a silly question. The industry is far too big and far too important, especially in emerging markets, to go away at this point. The fact is that everything in the market, from exchanges to swaps to DeFi to metaverse to NFTs, non-fungible tokens to crypto gaming, everything is functioning just fine with lower trade volume because people are building out their fundamentals. And for quality projects, those fundamentals are stronger than ever. So while it's nice to have more volume, yes, the idea that financial speculation and short-term quick flips to make money are the reason that many of us are here, it turns out that's not true at all. Many profiting in this rally are still holding and are not selling, myself included. And people are here for projects and sectors they care about. Many people care about them, especially for the long term, and are kind of righteously stubborn about it. That's going to continue. And of course, so will crypto as an industry.